Hey everybody, great to be back here with you. Mike Fairborn here, sitting in for Cameron May for Advanced Technicals. Really looking forward to our discussion, folks. And I wanted to extend a discussion that I had fairly recently on volume specifically and trying to tap in to accumulated volume or distributing volume over a period of time. And so I want to take a look into that, extending beyond the on-balance volume and really breaking it down into core details as how to kind of track, are we seeing, according to this particular indicator, are we seeing more volume? And does that volume more buyers relative to more sellers? I think it could be a really interesting discussion and definitely an indicator that I like to use from time to time as well myself. So with that, great to have you all on board today. I'm joined in the chat by my manager, Scott Thompson. Great to have Scott on board. And folks, any questions, comments you have, throw those in the chat box so we can address those. But let's dive into some disclosures to get the show on the road here. Now, information here is for general information purposes only. Let's see, options do carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Now, let's see, there's no guarantee that an execution of a stop order will be at or near the stop price. The paper money software application is for education purposes only. Investing does involve risk, including the loss of principal. Okay, with that, let's go ahead and just share our screen here and get going. Perfect. Just a quick look at the markets. How are we doing today? Well, it is a Friday, and happy Friday to all of you. And just ahead of our extended weekend, folks, we are down a little bit. We did have sort of a seasonal August, heading into September 1st. Well, next week we'll be into September, but sort of a sideways, I would say up to sideways move of August. Now, traditionally, the moves in September tend to be, this is the key word, tend to be a little bit down. Over the last 5 years, 10 years, I'll just give you a full screen chart here because it's really one of the only months that we've had that tends to be pretty consistent in terms of a downward market. I'm just going to hit this real quick. Just those of you that do look at technicals, advanced technicals, most of you do, of course, you're in this class for that reason. But, getting a sense of what tends to happen over the September timeframe and how that might factor into your other indicators that you're using as well. We tend to get a little bit of a sell-off, don't we, in September? Now, this is a 5-year chart, as you can see right here. And what I can do is I can actually make these just quickly here, a little bit more comparable here for us, using a percentage basis. So we could take those 5 years and lift them back up, at least show it on a percentage basis. And there you go. You can see right here, that is your September timeframe over here. We tend to get weakness in September. Now, we don't always have weakness. Sometimes we have strength in September. Sometimes we have sideways. Of course, down tends to be the average. If I change this into a 10-year time frame, you'll see much of the same thing. Folks, I've seen this on a 20-year, I've seen it on a 50-year time frame. I just throw it out there because it is one of those months where we do tend to get some selling. But by the way, we also tend to bottom, and the key word I keep saying is tend, and that is the average for the traditional sort of year-end rally as well. So I thought I'd throw that out there to you just so you could see it. Let's move back into our charts and discuss just some volume concepts. First of all, we've got to get into a security that actually does have volume, or well, a stock in this case. We're looking at Datadog here. One of the indicators that I do use is money flow, and what is really synonymous with money flow, it's virtually the same indicator, and that is on-balance volume, an indicator built in 1963 and is still used today. Let's go ahead and just give it a little color here, a little bit darker, or a little bit thicker there. On-balance volume, I want to start off with the basics of volume first before we go into the volume flow indicator and really hit it much more in depth than I had even previously done, so you really have a strong understanding of it on an advanced level. So first off, let me explain what unbalanced volume is doing. It looks at accumulation or distribution over, folks, and this is the key point, over a period of time, okay? Over a period of time. What are we getting? Now, it does that by making calculations on a day-to-day basis. The first consideration is, what is price doing itself? Is price closing higher on the day, or is price closing lower on the day? All right. And if it's closing sideways, well, then the money the on balance volume is just a sideways move. but I've included your normal volume in here. We have a giant volume spike as well. But if I come down here and I highlight this, we close down on, well, let's zoom in. Actually, let's give us a better sort of a feel for this. We'll zoom in on this and just pick out a particular day. And there is a down bar right there. We'll go ahead and use that as our case point. All right, so let's go ahead and take a look at this. I'm going to draw this arrow down and just highlight the volume that was associated with that down day. It was a down day, and so this volume right there is going to be subtracted from the on-balance volume. And remember, the on-balance volume is a total of volume. It's cumulative. It can run infinitely higher and it can run infinitely lower into the negatives, okay? But if we come down here and we look at this, that volume, because it was a negative, change the sign, the coloring a little bit, we took the on-balance volume lower to the amount of the volume. Now, I have to say, if the volume would have been higher and we closed lower on the day, for example, this bar right here, we did close lower on the day, and that accounted for, kind of got that lined up. It is this big bar here, but look how this volume really impacted the money flow down below. And that is how on-balance volume, we're going to be talking about an advance to the on-balance volume, which is the volume flow, an indicator introduced about 2005. So it took several years to get there, but there are going to be some changes associated with it. Now, let me just state this too. First off, what are some of the key advantages of, let's say, for example, money flow, or in this case, on-balance volume? Same thing. Sorry, I used a lot of money flow. I could use on-balance volume, very, very much similar. Slightly different math behind the indicator, but they almost look virtually the same. Kind of tries to do the same thing. One of the advantages, and by the way, if we close higher on the day, I had to highlight this, of course. If you close higher on the day, like we did right ahead here, and the volume does play a key role, we were up quite a bit. Look at that volume. See that volume? Folks, that is added to the upside. So that will make OBV, on-balance volume, go up. And what traders will use and how they'll use this indicator, because they use it the same way, what I'm about to explain right now, in terms of divergences, positive and negative, are we seeing volume coming in? Because sometimes volume can lead prices. Let's just go to a different stock here. Here is Apple, for example. We have Apple listed over here. Now, as you can see over here with Apple, and I actually do have a paper trade on Apple, so just ignore these little limits and stops noted up top here. But as you can see over here on Apple, you can see the read that we're getting off of these highs here that are associated with price. Okay, and you can see that listed right down here. So what we're seeing is these highs. Now, notice that price action itself held, and I've got a dotted line to kind of represent that just below here. It held at that resistance level. Volume, however, in terms of buyers, more buyers than sellers, because think about this on a cumulative basis. You're getting more buyers over time. Prices are closing higher. Is volume doing what? Is it ticking up? What's happening with volume here? In this case, volume is increasing. And by the way, on the down days, it's a lot less. And so that enables the read on this on-balance volume to increase. And right here, let's clear out everything. I'm just going to highlight this right now. When did we break above that high point? It was right at this point in time right here. If I draw an arrow, and I'm going to try to draw this as straight as I can, it came a little bit before the breakout of price, but you'll notice what happened. What did prices do? Prices are still holding at resistance. Prices haven't broken up yet, but look down below. You know what has broken up? On-balance volume has broken higher. And by the way, on-balance volume continued to break higher. Let's look at this point right here, just to highlight this. So we broke here above our range. We broke again, and look at this. This was a lower high. We broke again on, it looks like another lower high. This is a little bit of a higher high, but on-balance volume is substantially higher. This implies accumulation, and it's often termed as the smart money indicator because it takes a lot to get that going higher. And a lot of times it takes a lot of buying to get this to change. And a lot of times what that can mean over a period of time is we're, in many cases, looking at potentially institutional buyers coming in, hedge fund managers, whatever the case might be, pension funds that are coming in and buying a core position. And when they tend to buy, a lot of times they buy and they hold those positions because it's due to a fundamental expectation. Now, what's interesting is all this was happening ahead of earnings right here. And so what do fundamentalists do? They try to get a sense of, hey, are earnings going to be good? Is the company going to show strength? So this can be a really interesting and core indication ahead of an earnings announcement as well. Not just an earnings announcement, but generally speaking. And this is referred to, it's an early indication sign. Some would say an early warning signal. It's warning that prices might break higher. Now we can see the exact same thing happen on the downside too. And I've seen this indicator call incredible moves where money just slowly starts changing. Prices aren't moving much, but money is flowing out according to the indicator. And then some news will come out and it will break down sharply or whatever the case might be. So this is how it's often used. It's used as a positive. We just looked at a positive divergence indication. Negative divergences are the same. Now, the one thing I'll state over here too, is as long as money flow, in this case, on balance volume, is going higher with the underlying stock trend, that all else equal is a positive. In other words, you'd like to see more volume fueling an upward trend for us to believe that that trend is going to continue in the future. Okay. And what you don't want to see on these pullbacks is too much of a decline over here. You don't want too much accumulated volume pulling back on a potential flag pattern here coming down. Okay, because otherwise what that will do is it will show that you might break. Let's say, for example, if that happened, and that didn't happen in this case, but in some cases it will. You'll see a flag pattern occurring like this. It's a higher price, but down here, because of the selling on the pullback, you broke a low. So you're always looking at this indicator for highs and for lows. Yeah, so Althea says, is it buy volume or is it sell volume? It determines that based upon where we close on the day, which stands to reason over an extended period of time, Thea, and everybody, right? If you have enough higher closes, you're probably just getting more buyers relative to sellers. You're closing up on the day. And that's kind of one of the key points how this indicator works. Now, you're kind of getting 2 for 1 today. We're actually leading into, because this is kind of a cousin to the VFI predecessor, volume flow indicator, which is what I'm heading into next. And the reason why we're going to go in there, let me just see how we're doing down here in terms of, and Scott's nailed it right there. Yeah, if it is more buying when rising or more selling when falling, and that's exactly what it does. And so it just tries to give you a read behind the scenes. What are people doing in terms of the buying and selling? We know what prices are doing, but how does that correlate to volume, right? Where buyers and sellers could be. Can really help us in this regard. Let me flip this back here too. Once you flip this, you got to remember to flip it back in terms of the percentages so we can see actual dollars off to the right here. Okay. Well, now we're going to head on back. We're going to head back to our original. We got other indicators out there as well, but let's take a look at this right now. And this is an interesting indication here. We have Datadog, and let's just observe kind of what we're seeing on unbalanced volume. We had this massive move down over earnings, and you have to say that it really, really did impact that volume spike right there. Did substantially, you could say, impact the unbalanced volume. It damaged it, you'd have to say. We have another one over here that damaged it again pretty well, right in this space right there. And you can see we're just like, it looks like, my gosh, this is terrible. In other words, if we're just reading the unbalanced volume indicator by itself, based on a big volume spike, it says this. We could break down all the way below this level because of this weakness. But notice prices are actually holding up okay. In fact, in a lot of ways, this was a pretty strong recovery. And we have actually had a little bit of a zigzag down, but we've kind of curled up a little bit. Almost, it looks sort of maybe the beginnings of a possible cup and handle pattern, actually. Okay, we can't say that for sure, but hey, big picture, this could be actually a flag. Now, if we look down here, my gosh, it looks horrific. So what the volume flow indicator does, I'm going to add it in right now. What's fascinating is this came up as actually a divergence indication. And I'm going to pull it up here for you right now. So this is volume. You got to just type it in just as it is. Just volume F would pull it up here. Volume flow indicator. I'll pull it up, and it does have some defaults. Let's talk about that in just a second, but notice the differences between the two, first of all. Let's kill volume here for just a second, core volume, since we have an idea of what's already going on there. Free up some space on the chart. There we have it. What do you see down below here? It's actually much more in line with prices. It took a little while to recover, but look where we're at right now. At this point right here, we've actually got the volume flow indicator breaking new highs. In other words, that's the positive divergence that we talked about previously. It's diverging on a positive level. Actually, we're taking out some levels right here, just getting close to our zero line, right? That's total accumulation or distribution. But we're really just looking at highs and lows at this point right here. So as you can see, we're coming up here. So what's going on? Well, let me show you. You know why we didn't break down as much right there? Because if you look at this, the volume spike that we did have on here, it didn't add nearly as much to the downside. And that, I think, is a really, really important fact, because sometimes you can just get a lot of buyers and a lot of sellers offsetting in and out, and you just get a big volume spike, but it can really throw you off in terms of what might be going on behind the scenes. I mean, if you look at prices, the VFI also accounted for price action as well. It said, well, not too fast. I want to show you something that's happening over a shorter term time frame, which is what the VFI does. Now let's go into those time frames right now so we can break this down into more detail. Okay, now hang with me too for a little bit, because in my ThinkScript class on Thursdays now, I did a class on this where we broke down and we created a scan for the VFI to find specifically this accumulation and distribution. In other words, are we seeing positive divergence or negative divergence, right? And I've got that in a scan that I'm going to share with you guys in just a second, but I want to give you a good solid feel for this indicator. I want to really break this down in more detail. Okay, so it does basically the same thing that the OBV does. In terms of, did we close higher? We take that volume and we add it. Did we close lower? We subtract it. If we stayed sideways, well, I'll tell you what, money flow is going to go sideways. In this case, unbalanced volume, or VFI, is going to go sideways anyhow. Okay? So it still has that component to it, right? Which is, there's some logic behind that, which is great. Now let's pull up the indicator itself, and I'll show you right here. So this is the volume flow indicator. You notice the defaults. The standard default is 130. Now what that means is it puts on here a 130-day moving average. And that moving average, it's a simple moving average, and it is based upon volume. So I've got to pull back volume here. Now I've kind of made some comparisons. I'm going to show you what that looks like. So, we've got volume, right? That's right. Volume's over here. Volume's in an interesting spot under equities, under the wheel and equities, and then we click on that. We've got our volume in here. So what it does is it looks back over a certain time frame, and then it finds us the average volume. And it does that by putting on, like say for example, I'm going to show you down here. Let's go ahead and do this right now. So if I've got a simple moving average right here, notice if I click on the simple, I can go over to the right and I can say, well, put this on volume, which is exactly what this does. We're looking for an average of volume over 130 days, and you'll notice the number can be changed if I want it to be too. On the VFI, I can change that. But it's saying, let's give us enough time, not too far back, but what's that average volume look like? This is very important to what it's going to be doing in a second. But look at this. So there it is. There's our average volume line. You can kind of see that line now. That's our average volume, and we're clearly below average volume on Datadog already. It's Friday, tend to be lower volume on Friday. The day's not done yet, but that is the average volume line. So that's the baseline that the VFI uses. Okay, so it uses an average of volume first. The next thing it does is we've got another indication. That's the max volume cutoff. And what it will tend to do is it tends to average out the average move. So if you're within a range below, let's say, for example, let's say if we had an average volume of 1 million, okay? 1 million shares traded. Now, if we had 2 million shares that were traded on a given day, nothing's going to happen. We don't have a volume cutoff. The volume cutoff would happen at 2.5 million shares, and from what happens at that point in time, it starts to reduce the impact of volume. It doesn't make it as massive. It does the exact same thing on the bottom end too. And I'm going to get a little kind of a bullet point set up here so you can see it structured out exactly how that impacts the move. But that is what it's doing, and that is your volume cutoff. And of course, that can be adjusted as well. But these are the standard defaults. They kind of make sense to me as well. Anything, above 2.5% average volume. Let's say, for example, 2.5 million shares on average, it begins to reduce the amount until it hits a cutoff point. And I'm going to show you what that looks like here in just a second. Okay, so let's draw those out so you can see how this works. By the way, too, if the volume is too light, then it will actually have a lighter impact as well. Why is that important? Well, because remember, prices are closing if there's just a higher close. Like if it's just a penny higher, that's going to impact how this volume moves these lines, right? The volume impacts these lines, on balance volume, VFI, it will have an impact. Just a 1 cent move up or down. So volume plays a critical role. If it is too high, it can totally mess it up and change the dynamic of what's actually happening behind the scenes. If it's too low, it can also mess things up. So it minimizes it on the low end, on the high end, but if it's a little bit higher than normal, it will actually amplify it. So there's a lot of things going on, and that's exactly why I've got to kind of draw this out here. So let me do that right now. I'm going to put each one of these in here, and we'll put them into the box, and we'll get going on that, and I'll type that in. So this is what we've got. So in that base case example, so if we had an average volume of 1 million shares, okay? And let's see, there we go. Average volume of 1 million shares. What we'd be looking at is if we get to 0.05, or basically half of that, 0.5 million, okay? And of the average, right? Now we had the average. Okay, that's going to have a roughly an approximate, do I have an approximate key? Normally I did, yes I do. Well, right here. Approximately 40% weaker impact. So the indicator will influence the line down here if we are about half that level by this amount. It'll be a 40% less impact. So the volume that's used here, okay, is about 40% less. We're going to go ahead and just line these up. Now, if we did have the normal 1 million shares, right, as an average, that's our baseline, there is basically a zero impact. It's just basically the same around that range. And this is how it goes. If it's a 2 million, it's double the average. It starts to impact things a little bit more. So as you go outside the double range and do a 2 million share, well, this is an average of about 60% greater impact that it has. Stronger. Okay. Now, you might have guessed, if we get to 2.5 million, we just talked about it, 2.5, well, that is at the cutoff point. Cutoff, and that is going to be 80%, approximately 80% is as much as that can go. It won't go any more than that, up to. So it's basically up to 80%, up to 80% impact. And remember, this is going to be upside or downside. So if it was a down day, it's going, which we saw here, it's going to impact this substantially less. And that's what's going on behind the scenes. Now, question is, I'm going to throw this out to you guys. What happens if we get 10 million? What kind of an impact will we get? 10 million shares traded on the day. So it was just massive volume. What does that mean? What kind of impact would it have? Well, it's still at the cutoff, right? So that is the cutoff, and that's just going to be, it caps off at 80% of that volume, right? There we go. 80% additional impact, right? It will have on it. But it won't go any more than that. In fact, so in other words, over here, this is just share for share on the on-balance volume, and that can totally mess these up. And it does, and it throws these charts out for an extended period of time, whereas you get a much better feel over a shorter period of time, giving us a sense, are there more buyers or more sellers when it comes to the VFI, the volume flow indicator, over a shorter period of time? Particularly if you have a big announcement, this is exactly what we had with Datadog. So again, light volume, much less impact, right? It doesn't impact it as much. Normal volume, it's just baseline. It just acts like the on-balance volume, right? Heavier volume, there's a stronger push, and that's all the way up to 80%, approximately. It's like close to 81%, but that's how they've done it. So you'll find charts that really will give you some indications, according to this indicator, of positive divergence, okay? So any questions on that? I had to kind of set that up, but I'll leave that up here for now so you can kind of see it. Want to give you the inner workings of it so you really get a sense of what's going on there. But let's take a look at some of the questions here. Just a quick note. I think we're all set. Yeah, okay. Very good. Let's do this. I want to talk about actually, let's see. Does that cutoff essentially help to lessen the influence of noise? And that's exactly what it does. Thank you, Jill. That's what it is. It's a noise filter on that volume. And so it keeps that volume in check. It won't throw it out completely and just trash it. It enables it to remain in check, in place. And so therefore you can see what has been happening as of late with this volume. When you have such a massive impact over here, it can really influence this indicator. We've been really quite low through here, with just a normal OBV, but actually that volume has been increasing according to the volume flow indicator, right? So it does, it's a great way to say it. It does filter out extremes, is what it ultimately does. Okay. All right. That is one way to look at it, absolutely. And what I want to do now, though, is kind of show you guys, and I'll share this with you. It's a scan that I built. I'll pull it up. It's just in my, did this in the ThinkScript class. Let's go into it here. This was the VFI divergence. I'll go ahead and run it right now. In fact, I'm going to run it on the S&P 500. I'm going to give it a little bit bigger basket of stocks to look at here. We can kind of take a look at here. We'll look at a few of these here. Okay, just like that, it ran through 500 of these. Now, keep in mind that ThinkScripts are not guaranteed for timeliness or accuracy, but as long as the data that's coming into the platform is accurate, and we have good data coming in, so then it should just should mathematically impact that appropriately. I mean, in other words, yeah, you should get the read that you're after with the correct data, but I wanted to state that. Share that in the chat in just a second. Let's go ahead and take a look at some of these. So look at this, Bristol Myers, so a pharmaceutical. Let's take a look at this one right now and see what we've got. BMY. Oh, nice. Okay, so safe to say, I'll clear this guy out again, the volume so you can see it a little bit better. But safe to say that we're not getting much of, let's say, a positive divergence or any indication of volume outpacing, positive volume outpacing negative volume on the on-balance volume. In fact, you can see, I would say this, though, there are a couple of things going on. Volume has stayed strong with the on-balance volume over a period of time. So if you want to look at an extended move, long-term on-balance volume, money flow, really, really quite good. Accumulation over a long period of time, it kind of nets things out. Remember, we're looking at that 130-day average volume, much, much shorter. So we're putting a lot of weight into a shorter term time frame, but how is that working when we combine the two together? Well, on one side, it shows some interesting accumulation. Prices have been holding up down here. But if you look at the VFI, okay, we showed a dip. There was some selling pressure, but look over here. We're just barely starting to take out these highs right now. So in other words, this move off the bottom right here, according to the VFI, fair number of buyers relative to sellers. And it's interesting too, because you kind of had earnings right there. Sometimes stocks will sell off on earnings, but guidance forward might be better. Looks like almost a double bottom range in here. And although we did not take out this new high yet, we didn't close above that high. Still, this was the higher closing price, right? VFI did break higher. So technicians might look at this and say, well, something could be brewing behind the scenes. As a matter of fact, maybe because we did take out a new high here, there could be, according to the way some traders would look at it, maybe there's a higher likelihood of support right through here. Prior lows are above that level, whatever the case might be. And so this could be something like a shoulder, head, shoulder formation. We're getting, remember, that additional indication of that through the VFI. It's giving us some additional insight that maybe support will be stronger here. Maybe this is ready for a trend higher. You can see that we did take out this high as well. So it says, according to what the buyers could be doing, buyers relative to sellers, that we could be on the verge of taking out this high. That would be an extension, though, right, of that inverted head and shoulders pattern. By the way, the neckline on that head and shoulders, what a technician might look at next, because you never want to throw those out. Right there. They might want to wait for further price confirmation to get above this level, but some traders might, whatever the stock might be, maybe they'll just put on a smaller position ahead of time and try to build a position. By the way, what's nice about this too is, remember, it's a smart money indicator. Why might they be buying? Long-term indications OBV, shorter-term indications now from the VFI. Why are they buying? We have time to look into it. This might be totally counter to a lot of what you guys look at, but what are the fundamentals? Why, and do those fundamentals resonate with you guys? I'm just going to pull this up because maybe you can look at it holistically too and say, well, there might be some income investors that are interested in here. Remember, dividends can be cut at any time, of course. Now, this is a longer-term dividend payer. I believe this is Dividend Aristocrat. I think they've raised their dividends for at least the past 25 years, if not more. This might be a Dividend King, if I'm not mistaken, but don't quote me on that. That's consistently each and every year. But like I said, that can attract buyers. So we don't know why they're coming in. We don't know who's accumulating it, but there you go. That could be a sign right there. That's probably a very, very high yield relative to where it's been historically in the past. 5.5% for this farm company. All right. So you can combine these together. All right. Yes, I'm gonna get you that script right now in our discussion, so you've got it. Yeah. So we had 33 companies that actually have positive divergence with the VFI specifically in the S&P 500. Let me go ahead and share that with you though right now. Here's that scan, and as always, like I say in every class, this particular link, if you're seeing this in the archive or the recorded session, it will be in the description field below the YouTube video. You just want to click in more and you'll find that script link down below. All right, but here it is. So this is the VFI Think script. And there you have it. While I'm at it, I'm just going to highlight, folks, that that ThinkScript class, if you are interested in it, I do take a number of these indicators and I'll build scripts from them. In fact, this was the class I looked at. I just didn't go into nearly the detail. A couple weeks ago, we talked about it. If you want, I have more examples in this class as well, if that's of interest to you as well. But I try to, on a lot of these advanced type indicators, I'll go through and do classes on them. We've got acceleration of the MACD, etc. If you found this of interest, you can find that in our playlists. In fact, if I just go back one, yeah, here are our playlists here. A lot of great content from the coaches here. I'm just going to plug this playlist in though, just so you have it. here if you want to take a look at that. This will help you. The ThinkScript's helpful because not only can you understand those indicators, you can go into more detail on them. You can learn about them. You can spot them using the Thinkorswim tool. So if that's of interest to you, it is there. In fact, what I'll do too, here's one just like on the MACD that was similar when the MACD starts to expand out. You can take a look at some of these. I'll just go ahead and actually put a link to this class in if you want to see more details because it was VFI class. It's there, by the way. Yep. All right. All right. And Brent did one, it looks like yesterday. Yep, because I wasn't able to be here. But yeah, cool. Some moving averages lining up as well. Excellent. All right. With that, folks, if you're finding value from this class, definitely consider smashing that like button. Would love to have you subscribe to that Trader Talk channel that I just had shown you as well. Let's go ahead and take a look at another one, though, while we're at it. Let's see. Let's get something outside. We got some healthcare in here. Look at this. Healthcare sectors for sure. And then the Salesforce, that's not healthcare. That's software. Let's take a look at CRM and see what we've got. These are going to be really fun, though, for you guys to kind of take a look at here. So what this is showing is that we're getting strength over a period of time, right? And so we're getting a number of divergence points occurring that have occurred over this time frame. You can see it didn't quite reach this high, but we're getting more buyers than sellers on down days. The script itself, I don't want to go into too much detail because it is really quite in depth. I try to keep it a little bit more basic, but what I'm saying is I've got a look back period using the fold feature within Thinkorswim. ThinkScript specifically, I'm looking back 44 days and trying to get at least 15 of those days where there was a divergence that was kicking in gear. In other words, we closed higher over that time frame, over a particular day, where prices maybe didn't close as strong to the upside. Volume was there. That's the divergence we're looking for that can show up over a period of time over the last 44 days. And these can be changed as well, just to let you know. More about that, though, in that ThinkScript class, if you want to check it out. I go into that in more detail, but that's what's going on there specifically. All right, let's see that CRM. So CRM, let's look at CRM relative to on-balance volume. So somewhat similar. You know, you can see CRM down here, but you can see, you know, this is really interesting too, because if that, we're very, very close. In fact, we took out this prior high, which is interesting. That's a higher level on price, which could lead one to believe that, hey, maybe we could challenge that resistance level, right? That's oftentimes the first point to a change in trend. The key thing here, though, I would say is, gosh, might as well wait till earnings. Wait for earnings to kick in gear right there. So, all right, but have fun with this, you guys, over the weekend. You can find some cool ideas. By the way, the same concept, we can use on-balance volume for that scan as well, just by substituting on-balance volume out as opposed to VFI. I went into that in detail, a little bit more detail on the script as well, the scan, I believe. So, all right, well, with that, everybody, it's been great being with you. Hope you found that informative, useful. I always like volume because volume can, at certain times, precede price action. And so getting a better understanding of that can be helpful. We did that today. We broke down specifically on balance volume, and then we went to the VFI, volume flow indicator, and explained how that sort of filters out those extreme volume levels. Low side, high side, I gave you guys a breakdown as to what's really going on behind the math behind that indicator. Hopefully you found that helpful and informative and useful. Well, I wish you all a fantastic rest of the day, folks. Have a fantastic extended weekend as well. Thank you so much, Scott, for your help in the chat. I did not see a survey. Scott, I believe, would have posted that already. I was trying to keep an eye on it, but didn't see it. Yeah, I think we're all set. All right, everybody. Have a great rest of the day. Good weekend coming up. See you next time.